Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then bounce around and look for something to trade. Now, if you've been following the market at all in the last couple of weeks, you've seen it be on a wild ride to the downside. So right here, we're looking at the S&P 500. If I just do a little chart here, you can see, if you look in this box, it'll show you like how much it's moved and how long. So you can see it's moved 8.84% down in 17 days. So we're gone about 9% down in the last 2.5 weeks. Quite a big move. If we look at the NASDAQ, do the same thing. You'll see we're down 13% in just over 3 weeks. And if we go to the Russell, which has kind of been on a downslide for a while, but you can see also 13% in less than 3 weeks. So the market's in a bad place right now. I mean, you can say we're heading towards a bear market, who knows? So what are we going to trade though? Because the market's extremely volatile, it's earnings season, there's a lot of crazy stuff going on. But here's what I want you to look at. As we've found out in the past, when the market goes down, that means volatility goes up. As you can see right here, as this went down, the volatility went up. So let's go right to the volatility itself, and we're going to learn to trade volatility because there's a few differences when we trade volatility. This is called VXX. It's what they call an ETN, but all it is essentially just like when you think about ETFs. These are slightly different. They have something called drag, which takes a bit of a toll on them. But for our purposes, all we're looking at is this is a volatility index, and we're going to learn to trade it. So as we've seen for most of the year, the last, let's say, 6 months, the market's been going up and volatility's been going down, except for a few big spikes along the way. And right now we're seeing a spike. So, and you can see this is the volatility on volatility, not to get too confusing. But what we're looking to do here is we're essentially going to say, hey, volatility is spiking, the market is tanking, but we don't expect this to last forever. So as contrarians, we're going to say, hey, we think it's going to probably, hopefully cap out at some point, possibly, and then over the next few weeks start to head down. That's our assumption going into this, that the market will at some point mellow out, and that means volatility is going to start to come back down. So if we go to a trade page for this, we trade volatility slightly differently than regular stocks as well. Usually we're looking for that 33 to 40 cents per dollar width in verticals. You're never going to get that when it comes to volatility. It doesn't trade as expensive as that. So what I mean by that is if we open up this expiration cycle, in this case it's 54 days, it'll be 53 tomorrow. Again, this is VXX. We're going to open this up, and the way we trade volatility is simple. What we do is we go to the stock price and we start by selling the call directly above it. And when it comes to trading volatility, my personal choice is to go $2 wide, because you don't get a whole lot more money the wider you go. It drifts off very quickly when you get to the call side, as we'll see in a second. So what I'm trying to do here is I'm looking to do a $2 wide vertical and collect a minimum of 50 cents. Now normally that would be 66, right? Those are our rules. It'd be 66 to 80 cents is what we're looking for. But again, volatility trades totally differently. It trades a lot cheaper than regular stocks. So again, we're in this 54-day expiration cycle. It'll be 53. And what we're going to do is we're going to start by selling the 24 call and making it a $2 wide vertical. So we're going to go 24 and 26. And you'll see right now it's only trading for 40 cents. That's fine. This isn't always a trade that's possible to put on. We can only put this trade on when the market starts to tank and volatility shoots up. So what we're going to do tomorrow is when the stock opens up, we're going to take a look right here. If the market tanks, this is obviously going to go up. But what we're going to do is whatever happens tomorrow, we're going to look to sell the call directly above where the stock price is for VXX, and then go $2 away and create a $2 wide vertical. And if we don't collect at least 50 cents on this trade, we're not going to make it. So it's a fairly simple formula. 50 cents or more, $2 wide. If it doesn't happen, it doesn't happen. But that's our trade for tomorrow in volatility and how you trade volatility in general. Like I said, it's a much more different product than any other stock out there. It's going to trade cheaper when it comes to the call side. We're going to look to collect less, and we're going to do a much closer vertical than we would normally do. Usually we'd probably go further out as things get volatile, but in the volatility indexes you have to be right on top of it. So that's why we're going to go right above the stock price, sell a $2 wide vertical, and look to collect 50 cents. And if we can't do it, then we just won't make this trade. But we'll see how this all plays out. It's going to be a crazy week, I'm sure. So that's our trade for tomorrow, and that's how we trade volatility. Hello everybody, and welcome to what I believe is an exciting opportunity. Now, many of you might be familiar with my classes up on Udemy, these 5 courses that I have on Udemy right now under the Option Trading for Rookies series. And my goal, if you follow along with what I'm teaching, is to really get you all up and trading as confidently and as quickly as possible, which is why I really believe this service I've created is the best way to get to the next level. Now, if you go to sharpertrades.com and you go to the courses page, you'll see these alerts pop up, and the option basic trade alert right here sends out 2 to 3 trades per week in real time. These are trades I'm actually making at the time I'm making them, and on top of that, they'll send you the alerts when I close these trades for the maximum profit potential, best return on that trade. Now, normally it's $49 a month, but I want to reward all of you who want to take advantage of this because you're taking my course. I feel like it's in your best interest and mine to get you kind of up and going as cheaply and quickly and confidently as possible. So go to Sharper Trades, go to courses, look up this alert, and then what happens is if you type in this code right here, basic option FB1, so when you click on this alert, it'll take you to a page where you can type in this coupon code, and for you lucky few that want to take advantage of it, I'm going to give it away for $1 for the first month, because that's how important I think it is to get up and trading as quickly as possible, or at least see somebody trading to see how it works. Now, as I said, it's only $1 for the first month. If you stick with it, it'll go to $49 a month, but you can cancel anytime. So if you want to do it for a month just to see what it's all about, great. If you want to keep going, great. But again, this is to thank you for being such loyal and studious students, because like I said, at least for me, the best way to learn how to trade is to get up and trading with somebody that's trading in real time, which I am. So take advantage of this. Go to the Sharper Trades page, type in this coupon code, and go ahead and get this for only $1 for the first month and see what trading looks like in reality. And you'll get up and trading, I believe, quickly and confidently, much quicker than just trying to learn it through book smarts. So take care, and please continue on with this course. Thanks.